Hey friend, welcome back to the channel. If you're new here, I'm Stephanie and this is my 10-year investing challenge. I'm building a real stock portfolio starting with just $1,000, not adding another penny, focusing on high growth, quality companies. No hype, no fluff, just principles, progress, and purpose. And before we go any further, I just want to read this disclaimer. You are responsible for your own investment decisions. Do not use any information on this channel as a means of investment advice. These are just my ideas. And if you've been following me for a while, you know how erroneous those can be. And I will continue to misjudge the market at times. I make the best decisions for my portfolio based off of my research. Your decisions must come from your own research. Don't copy my paper, do your own work. This whole episode can be summed up with this one quote. Don't invest in what you don't know. Learn first, then invest. Robert Kiyosaki. And that's the energy I'm bringing today. Now, we all know investing can be exciting when your money is growing, but when the stock market drops or things get uncertain, you'll need more than just momentum. You'll need conviction and you'll need clarity. Before you commit your hard-earned money to any company, you need to ask yourself these following 5 questions. Number 1, how does the company make money? Number 2, are they a leader in their industry? Number 3, what do you know about the leadership? Number 4, can this company expand over time? And number 5, can I sleep at night owning this company? It seems basic, but you'd be surprised how many investors don't know the answer to the question, how does a company make money? Let's look at Tesla, for example. Most people know they sell electric cars, but their revenue also comes from leasing vehicles, in-app upgrades such as self-driving features, solar panels, battery packs, and energy storage systems for homes and businesses. They've created multiple revenue streams, which is something that I personally look for in companies I invest in. Question number 2, is the company a leader in their industry? Everyone has competition. The question is, does this company stand out in a meaningful way? And in keeping with Tesla, we can see in Q1 of 2025, they held over 43% of the US EV market. That means that almost half of vehicles driven in the US that are electric vehicles are Teslas. That's leadership. Ask yourself, do they have dominant market share? Are they respected in the industry? And do they have room to grow? If they're not the leader, that's okay, but they should have a clear path to get there. Look for that in earnings calls, interviews, and company roadmaps. Question number 3, what do you know about the leadership? This one's huge. Great businesses rise and fall with leadership. Now, Elon Musk is a fascinating case. He is a visionary and he is very controversial. He's built and sold companies like Zip2 and PayPal, but he's also been removed from leadership roles in both of those companies. He now runs Tesla and now owns X, which is formerly Twitter. Some investors love him. Some worry he's stretched too thin. The lesson? Look beyond the headlines and ask, what companies has the CEO led before? Did those companies thrive or stumble? What's the sentiment from other investors and analysts? You can find the answers to all of these in forums, earnings Q&As, and analyst reports. Leadership isn't everything, but it definitely shapes everything. Question number 4, can this company expand over time? Investing is all about the future, not just where a company is, but where it's going. One way to spot future growth is to look at research and development spending in their financial reports. As you can see from this infographic, Tesla spends almost double its competitors in R&D. That's more than any other automaker. They're not just maintaining, they're inventing what's next. You can find the answers to this on earnings calls. Most analysts always ask future-focused questions, like what are they investing in and how are they evolving with the world. If a company isn't actively building for tomorrow, you might not want to hold them long term. And the last question, can I sleep at night owning this company? This is a gut check. Imagine tomorrow the market crashes. Your portfolio goes down 50%. Would you panic? Or would you be eager to buy more shares at a discount? Conviction matters. That's why these questions aren't just homework. They build your confidence. If you know what you own, why you own it, and what it's worth, you'll stop reacting and start buying when the market gets low. You don't want to be the person on Reddit saying your life is over because you lost your entire life savings on a company. These questions help me make better decisions. It keeps me focused on the long-term game and not the daily noise. Guess what? I've added the first company to the portfolio. The company is Centene Corporation, ticker symbol CNC. Now, you may have seen this company in the news recently for dropping 40% in one day after they pulled guidance for the rest of the year. So, why is it so cheap right now? What happened? Well, here's the short version. They underestimated medical costs this year, especially in behavioral health and prescriptions. They also expected to get money back from a federal risk sharing program, but instead they now owe $1.8 billion. Their profits were cut in half, and as a result, they had to pull their earnings forecast for 2025, which scared investors off. Basically, the business is broken, but I believe that it is a temporary, not permanent situation. So let's practice those 5 questions. What does Centene do? How do they make money? Well, they get paid by the government per person per month to make sure people get the care they need. Everything from checkups to prescriptions. These people are some of the most vulnerable people in our society. People on Medicaid, Medicare, and on the ACA exchange. If Centene budgets right, they make a profit. But if they overspend, they lose money. Question 2, are they a leader? Well, kind of. They're the number 1 Medicaid insurer in the U.S. and one of the top ACA plan providers. They serve over 28 million people, but they're not as polished as companies like United Healthcare or Molina. The top dog in managed healthcare is actually United Healthcare Group. They are the gold standard in scale, profitability, and diversification. Think of Centene as the underdog with reach, but currently in need of a bit of a turnaround. Question number 3, what do we know about the leadership? So, Sarah London is the current CEO. She stepped into that role in March of 2022. Before becoming CEO, she was in charge of their digital strategy and health enterprise operations. In other words, she's been behind the curtain, streamlining systems, improving care delivery, and pushing technology. When they took that $1.8 billion hit from ACA, mispricing, she didn't dodge it, she owned it. And when the company had to pull its 2025 guidance, she didn't sugarcoat it. She simply said, we have work to do. And honestly, I respect that. Humility and openness are characteristics every leader must have. I am concerned that she may not be equipped to handle such a turnaround. It seems that she was brought in to advance and modernize Centene, and it remains to be seen whether she is a turnaround kind of leader. She seems eager to fix pricing and bring costs in line to get the company back on track, but we don't know, so we just have to kind of wait and see. Number 4, can they grow again over time? My answer to this is most likely, but they'll need to fix their cost structure and win back trust. If they do, they could return to earning $5 to $7 per share. At the time of this taping, the stock is currently around $33. Even in a bearish outcome, I believe the stock could still reach $40 to $45 over time. A base case, somewhere around 66, and in a bull case, 105. Even in the bear case, the upside is limited, but the risk is already priced in. I'm buying this stock at a deep discount and holding for a patient recovery. CNC is now my anchor value turnaround company in the portfolio. I expect growth to come from the company's ability to fix errors in pricing. Buying broken but not dead companies can still deliver some major upside. And the last question is, can I sleep at night owning Centene? And the answer is yes. I can sleep at night knowing that this is a long-term value turnaround play and not a gamble. I am comfortable holding it for years, expecting to see a turnaround in direction and profitability. Centene may not be flashy, it's not a meme stock or an AI rocket ship, but it's a real business that serves real people in need. And if they can execute it well, it could quietly triple in value over the next few years. So what do you think? Do you think I made a good decision? Do you think that the company is worth investing in now? Do you think it will actually rebound over time? You can let me know in the comments. And if you haven't subscribed yet, go ahead and hit that button. Every week I'll share updates, stock ideas, portfolio milestones, and lessons I've learned along the way. Remember, this is a journey, and you don't need a lot of money to start. You just need to start.